BHI 3.73, EDU, WHR, Hess. Oh no, we know this one so well. Up 3.03. We got earnings season in full bloom. You can see that we got a fairly decent list. CMI, MCP, which we make markets on. We added CMI to our list. What else do we have in here that may be of interest to us? Other than on the NYSE, where a lot of the program trading occurs, we're going to have an FOMC meeting with Ben Bernanke today. And the thing about it is, it's always gap these futures like they do and gap these artificial price movements. At that point, they're going to put in their highs and then they're going to reverse. The ones that we look at on a weekly level, overbought 92 or higher on that percent DS handle, means that they gap to sell, because it's going to take a lot more volume and a lot more money to get them up there to keep them going. Once this FOMC meeting comes out with the announcement, there's an announcement and a press conference today, and everyone is going to be looking at the language in this and that, and removing the liquidity. There's going to be a lot of blame game. Just remember one thing, the worldwide network, people outside of the U.S., when you look at these videos about this, is the thing that's going to be the blame game in there. And there's a lot of pressure on about these stimuluses and about this QE2. The language is going to be very, very, very important. No matter what Mr. Bernanke has to say, there's a lot of failed things going on in there. The thing about it is, the market is even more overbought than what it was, and it can do that. That's what overbought markets do. Just like bear markets get oversold for a period of time, it can get more oversold. Well, the same thing on the bull side. It doesn't change. It's always the same. So basically, in the FOMC minutes are going to come out today, prior to their announcement. So people will get a little heads up as to what it may be. Look, it's just a bunch of lousy financial reporters that don't know anything about the market or about Wall Street. They're just as public figure as anyone else out here. They don't have a clue. They're going to ask these little skit questions and this and that. So it'll be a little pony show with the FOMC meeting. On the gap down list, on the other hand, we've got the Chinese stock that I've featured. YOKU was a short. ROK must be an earnings thing. So on the NYSE, Johnson & Johnson is down. ConocoPhillips, oh boy. We featured some other things. This little LDK Solar, which was pimping himself last year, they got it down too. It doesn't trade a lot, but nonetheless, that's in the solar area. So X Steel reported earnings, not a big gap down. The markets are still in their bull mode. We featured that buying FCX on pullbacks and selling short that SLV and the other silver index that we featured on the homepage. They had some haircuts. Everyone's crowded in on those trades. The dollar rebounds with what he says, Bernanke says. If the dollar rebounds and that Travel Zoo TZOO was a great short, it was so bloated, overbought. What a haircut. $15 in a couple days. Look, the important thing to understand in the trade management, the overbought stocks can still gap, just like when stocks are oversold, they can still gap down and then kind of gap down and then they come up and they go through a price action pattern. Overbought and oversold has the very same characteristics. One is that of irrational exuberance and the other one is that of fear and pessimistic. Be light volume. This YOKU Chinese bloated ass stock, along with the Sina, the Soho, the ones, they're good to trade off of the bottom now that they've come down. I can tell that this one right here, which we had shorts on the other day, the earnings weren't all that bad, closes at 195. You got a $3 gap. This is called volatility price action gap. So when they pull back, they don't go straight down. They have their first pullback phase. They bounce or they gap up in pre-market artificial price movement. As they artificially go higher, they will slide that bid on the short side of that trade. Anybody want to bet me money? That's the way that price action volatility works. Ha ha ha. Ho ho ho. Lots of great trades. FOMC meeting. Light volume in the morning. Gap open list related to the earnings. We're over 50% through the earnings. The last quarter was good. Forward looking, though, let us not forget all of the other things. I'm not going to go into that right now. NYSE. Gap up. Make the intraday high. The ones that reported good earnings in here, when they do pull back, they're going to bounce off of the lower support level from the intraday high. They pull back, they bounce up, they will challenge those highs. That's called powerful momentum. News-related, earnings-related event. Trade action. NYSE. Gap up, gap open, FOMC meeting. Get your trading boots on.